All right, we're on live. Wait for some people to get in here. On TikTok, YouTube, you're not going to see my Ninja Trader. You're only going to see this, but I'm going to talk about my trading strategy for Ninja Trader. Let's go to Ninja Trader, actually. No. Okay, so for Ninja Trader is what I'm gonna be trading back with my funded account, and I'm doing a full port top step strategy, right? So a top step, you can only make 1,500 a day tops, and you gotta pass in not one day. Versus with my funded futures, you can full port in one day. So here is what I have. I have 4 ticks because that's 4 micro minis. Stop loss is 62, which is around $500 because this is $8 per tick. So if you do the math, 8 times 62 is around $500, and then this is right at 1,500. 1,500 is 187.5. So, and then I also have a trailing stop that is once we hit 60 ticks in profit, we have a 40 tick trailing stop. So now everything after 60 is the trailing stop just to lock in profit. Once we get halfway, well, it was halfway when I was originally doing 1,000. So it's I could move it to like 90, I guess, to be halfway. But I think 60 is a good amount because 60 is still $500, or like $400. So I mean, we could move it to maybe 70. So yes, 70 ticks in profit. Did I save that? Yeah. Okay, so 70 ticks in profit. We are having a trailing stop of 40 ticks, and then I could just set this every time I can just buy or sell market order, and it's gonna give me this every time, and then we'll just see how well it plays out tomorrow when we get on the charts. Obviously, if I can figure out how to execute without getting faked out on the 1 minute, I won't need this big of a stop loss. But that's what we're back testing tonight. We're back testing, and we did it yesterday. We're back testing higher time frame liquidity at 10 a.m. I do the 10 a.m. reversal, and then using SMT and how to execute on the 1 minute. You know what I'm saying? So, like, this is what we did. This is our last one last night. We had a liquidity point here. We swept liquidity. It's right after 11 o'clock, though, and then we get a market structure shift. We didn't have to wait for SMT on this one, so you could have got a really good entry off this trade around here. Stop loss below the low from the reversal, and then target, you know, whatever you want. I think it wound up going all the way to the other side for a beautiful market maker buy model. Beautiful trade. Obviously, like this, I won't need that giant 62 tick because I don't even think this is 62 ticks. I think it's 31 ticks and then 90 ticks up or something like that. But you'll know when you trade. All right, so let's keep going. Yesterday we were just trying to look at 1 minute execution. We weren't doing our top-down analysis. Today we're going to do our full top-down analysis on both charts. So let's start on the NASDAQ at the 1 hour. This is ES on the 1 hour. We don't already have SMT, but we have a high here that neither have swept, but ES is closer to sweeping it. And then we'll mark the high that was made sooner on both. Sorry if y'all hear that horn outside the window. And then we'll mark some sell side liquidity for also targets on the 1 hour. Now, I usually like to wait for one of these liquidities to be taken out at 10 a.m. before I go down to a lower time frame. So we'll go to the 15-minute for now, because I feel like the 15-minute is how you see S&T the easiest, and you don't want to sit on the hour because you won't really see the market structure shifts until they're like kind of late. We'll mark 10 a.m. like we do, and then I mark till 12. And then let's wait for a liquidity sweep of something, and then a just good reversal off of it. And then we'll go down to the 1 minute. Okay, now we can go into the 1 minute on both. So on ES, hold on, let's go to the 15 on both first for a second. So NQ swept, ES swept as well. Actually, hold on, you gotta make sure the times line up. That's the only problem. Okay, so this is ES swept both, NQ did not sweep both. So it's giving SMT, which is, SMT is all you need for a reversal. So SMT is ES swept these lower lows, as you can see, and then NQ did not. So that's it. So ES took out both lows, because technically this low is this low on, hold on, actually, you have to make sure the times line up. Nope, actually, I lied to you. Not SMT. Not SMT at all. This is this one. This is this one. This one is, okay, way down here. So I have to zoom out sometimes. Okay, so we don't have SMT at all. We don't. Okay. Let's still go to the 1 minute, because we do have reversals on both. Now, they could reverse into one of these gaps and reverse from there. However, we want to see if we can get an inverse too, which would double confirm us going higher. Do we have an inversion on the NASDAQ? We do not yet though. Okay, so now let's go down on the 1 minute for both. And we wait for a market structure shift. I do feel like we do inverse on ES, but not on NQ yet, but we do have market structure shifts. We have one here. If you want to get in up here, you can wait for the one up here if you want to get in there. You also can wait for a fair value gap to be inverse on the 1 minute if you want to get in earlier. I've been faked out on these. As you see, we inverse here, then we inverse on the downside there. But if you're confident in it going up, you can enter off any one of these. So something like this. And then our target would be probably these highs. Let's see how that plays out. Okay. Still not 12 o'clock yet. Okay, I probably would have sold up here. It's pretty close to our TP. A great trade. You could take it for a 1 to 3.13. Did not give us a fake out on this 1 minute reversal, which is nice. But you see, you wait for our overall liquidity point on the hour, because it's likely to for sure reverse from there, versus like if you just mark out liquidity points on the 1 minute. SMT is a liquidity sweep and instant reversal like turtle soup breaker structure. Yes, however, it depends, because on some, if you're say you're an ES trader, some days it won't be a liquidity sweep, it'll just be a lower low, and then sometimes on NQ it will be a liquidity sweep. So yes, it is a turtle soup. So, but we didn't get SMT on this one. You have to make sure you match the time frames, because they'll look similar or they'll look a little different, but it's not different. It's actually, so we had no SMT today, but we did get, this is what I wait for. I wait for a 10 a.m. liquidity sweep, because the trade is usually the bigger trade of the day. You did get a nice, where's the 930? You got a nice 9:30 down move that was bigger than the 10 a.m. move this time, but it still could keep going higher. Yeah. So it did our take profit first, but then it reversed from there because we moved it down. Did our take profit, and now it's reversing to go lower, so it's gonna stop you out probably. Boom, exactly. So that's the PM reversal, 2 p.m. reversal, same macro time as the 10 a.m. one. Is there a 2:50 p.m. move? No, I mean, yes. There's a silver bullet in the PM, which is 2 to 3, which is 14 to 15. Now, it doesn't happen all the time. I think the 10 a.m. one happens more, but you do get a reversal. Same shit. Key times, 10 a.m. to 11 is the silver bullet hour, and then 2 to 3. But obviously, I make mine 2 hours in case it's a little before or after. Yes, Eastern time. So you could have took both of these trades. I only trade the morning, but you could have took the reversal in the a.m. or just the reversal in the p.m. if that helps with your schedule better, or you could have took both. And let's see what entry we get for the p.m. one. We'll zoom in. Okay, market structure shift here. Tab back, and then that's your. I don't enter fair value gaps anymore. I just get in right at the market structure shift. The high before the reversal, and then you can target opposing liquidity, which is honestly the one we took. Boom. Either way, the 10 a.m. reversal, the 2 p.m. reversal is bigger than the 9:30 reversal. I know a lot of people like to trade these 9:30 reversals, which I switched my strategy to trading these, but you get faked out a lot more than these, I would say. Because it's not really an overall liquidity, it's like an internal liquidity sweep. You see, like it's like an internal liquidity sweep continuation. It could continue down here. It could just swept this in reverse. Like it's just too many small things in here, but I know a lot of people trade them. What about Roku this week? We'll do that at the end. I don't trade options, but I'll do recaps at the end. I mean, I'll do it real quick. I don't care. Roku this week. I don't trade bias, but as an ICT trader, I can tell where the market wants to go. So you go to the daily. Ew, Roku looks ass. Roku, we have a breaker to the downside. So I feel like our target is there, and it fills this gap. Also, with options, all gaps always fill. So where are my favorites? So Roku's target is in this gap here. So $78 to $87 is Roku's target. It's going to be a bullish week for Roku. What did you say is the bigger move time? I want to start. I just was wondering how much do you think you've made doing this? I'm still a break-even trader, and I've been doing it for 8 months. So you have to be willing to take the time to learn. So you might not make money for the first year or so. I've been trading funded accounts. That's why. So I've made 5K days, 10K days on the funded account, but then I get up almost past the account and lose it. So if you want to say like the days I've made 5K days, $100 days. I've made all the days. When I was trading my real money, I turned $100 into $500, and then I started doing prop firms. And I haven't really been profitable with prop firms because of the rules, but I'm profitable again, and I think I did. But again, on a funded account, not my own money. I did like $1,500 last week. So I'm going back to, not funded account, sorry, paper trading actually. I paper traded last week. So I'm going back to the funded account tomorrow. And then once I pass my funded accounts, I'll use my own money again. So you have to you learn the skill first. But thank you, congrats on $1,500. Do you end up over leveraging prop firms? I do now because, since I trade my own money now, it's just I risk the same amount a day as what it costs to monthly for the prop firm. So I full port my prop firm. So Roku, this is where it's targeting. This bearish gap for the Roku guy. But yes, so with prop firms, with futures ones, they charge you monthly. So I try to trade them regular. If you weren't on here, my strategy for my futures prop firm, I have to use, sorry, hold on. It's risking $500 to make $1,500 is what I'm trying to do with a trailing stop after I go into profit 70 ticks. Because with Top Step, it's a consistency rule. You can't make your 3K in one day. Because I did that. I made 3K in one day, and then they're like, you have to make another 3K in 2 days because consistency rule. Versus my funded futures, you can full port it. And then when I get funded and I go back to trade my live account, I trade the smallest amount, just one micro mini. We're risking about $50, $60 to make $150, $200. That's what I like to trade. So yeah, I'm a break-even trader right now. I just got profitable again though. The bigger move of the day is either I personally think the 10 a.m. or the 2, but I feel like the 10 has been working for me lately. If you want to, let me see. So the trade we took on Friday, biggest move of the day. So some people took this 9:30 up trade. We took the reversal down. It was bigger move to the downside. See, it traded sideways at the 2 to 3 p.m. though. That's why I like the 10 a.m. one because it works more often. Also, this one 2 p.m. smaller trade. 10 a.m. Look at this trade we took. And this is the day that the 9:30 people got stopped out. Or if you're a smart 9:30 trader, the 9:30 candle was the beginning of our trade, which was nice. So 9:30 people got in earlier. We got in here, and then you could have took this all down all day on Thursday. That was another one we took. And then I took this trade, 10 a.m. Again, another one, 9:30 people took it up. And then we waited for the reversal of the liquidity sweep, and we took it to the downside. It wasn't a nice of a move. And then 2 p.m. you also got a reversal, but again, smaller than the 10 a.m. one. And then again on, what was this? Tuesday, that's why this week was so good. We just had, Tuesday, 9:30 a.m. people got this invert for value gap, good trade. This was the S&T. ES took out this high. We did not on NQ. I took the reversal after we inverted this for value gap. Again, the bigger move of the day. That's what I'm saying. The 10 a.m. macros. And why? Because I know some of y'all are not on my charts, my lives every day. The 10 a.m. time frame lines up with these 3 strategies. It lines up with the ICT silver bullet. It lines up with the 950 to 1010 macros. And it lines up with the beginning of the 10 a.m. to 2 p.m. 4-hour candle, which is usually the biggest candle of the day. So all these 3 strategies, you could just trade silver bullet. You can just trade macros. You can just trade the 10 a.m. candle. And most of us will probably take the same trade. That's why I like trading this. Futures are a one-time activation. No, futures charge you monthly until you're profitable. And then, yes, a one-time activation. Even though Take Profit Trader and my funded futures are now not doing the activation fee. Are you bullish on indices due to the rate cuts in 25 days? No, I don't go into markets with a bias. I like the market to show me. I don't do that, yeah. Like when the guy was like, oh, what's Roku doing next week? I don't do that. Like, what's NASDAQ doing next week? I don't care. Especially because I only trade this section. So say, the market is bullish, but I take a down trade at 10 a.m. and then the market runs up the rest of the day like 300 points. I don't care because I trade 10 a.m. Like I just need to know what happens at 10 a.m. So I just get on the chart. I mark liquidity that needs to be taken out before 10 a.m. It takes it out. I get in the reversal and I take it to another liquidity point. I'll take it to this one. I'll take it to this one, and then I'm off the charts. Now, obviously, this day it ran down lower. I made my money down here and it kept running. I could have made more money, but it doesn't matter what happens after I trade. As long as I make my money, that's how I trade. Do you trade daily? Yes, I trade every day and I live trade. We can collab on live. We should. Can you show the 4-hour candle? Yes. Sorry, I have the silver bullet indicator on for those who are distracted by the lines, because people say my charts are messy, which fair if you think so. We should collab on live though. So again, the 4-hour candle here, 10 a.m. to 4 p.m. long candle. 10 a.m. to 2 p.m. longest candle of this day. These two are both long. This was 10 a.m. to 2, and then it kept running up in the afternoon, but again, it started with the 10 a.m. to 2 p.m. candle. This candle was long, but then we got reversal to come back up. We called it the 10 a.m. to 2 p.m. candle was just as long. This candle was longer on this day. This is the end of London session, and then 10 to 2 candle. Again, longest candle of the day. It was a messy candle though, very indecisive, but longest candle of the day, 10 to 2. 10 to 2, longest candle of this day. So you're really just trying to catch the PO3 of these candles. You're trying to get in when the candle's down here, and you're trying to catch it to the upside. That's really all you're trying to do. 10 to 2, the longest candle of the day. Nasty wick candle. This obviously gives liquidity sweep to the top side, take the reversal to the downside. Boom, that's all that candle is. 10 to 2, long ass candle. Now we have a long one here as well, but we love when this happens. Tap into a fair value gap, play the reversal back to the upside at 10. That's why, like, it's still the longer move too, because here most people get on at 9 o'clock. This candle started at 6. This candle was way up here at 6 p.m., 6 a.m., and closed down here at almost 10 o'clock. So most people got in somewhere down here. So their move was here to here. We caught this whole move back up to take out the buy side liquidity. You see what I'm saying? That's why I prefer the 10 a.m. Again, you just have to do what works for you. Some people like the 9:30 trade, and it happens to them every day they take it. It might be smaller. You know what I'm saying? I just like that move, 10 a.m. So let's go do another day on our chart. And I'll be trading. I'm not trading live on YouTube anymore because OBS has been making my brokers glitch. So, but I feel like no one really watches on YouTube anyway. Everyone watches on TikTok. It just sucks if TikTok does get banned, but I am growing more followers on TikTok. Like, I'm getting more rewards, more interaction, more people in the chat on TikTok. So I can trade on live trade on TikTok because I do it on my phone just like this. Versus like I use OBS for YouTube, and I'm going, since I have to use NinjaTrader. Now once I get a nice PC set up in the future, then boom, we can get some shit shaken. But for now, YouTube will not get live trades, but you'll still get backtesting sessions. Alrighty, liquidity, and I love it when we're already close to liquidity, so we just wait for it to get swept and then reverse. No S&T yet. Wait, hold on, let me make sure the times line up. 11. Okay, this is S&T, but for the day before. That I didn't even see that. So this was, yeah, this is S&T from yesterday, the reversal we caught. So it's hard to see in real time sometimes, but this swept liquidity, the trade we just, replayed. But on ES, it did not sweep liquidity. We swept on NQ, we reversed. ES did not sweep in reverse. So what is S&T divergence? Okay, S&T divergence is this right here. It's when NQ or ES, since they're pairs that match, they do the same thing every day. They're supposed to. When one takes out a low or sweeps out liquidity and the other one doesn't, it's clear signs of a reversal, as you see. Because basically we swept liquidity in here. So basically if you were trading ES and you maybe were in a sell trade, you would know to sell your trade because NQ is about to reverse. Because I've done that. I've been in a trade waiting for this sweep liquidity and it was S&T and it didn't, and I did not take profit when I should have. But usually you wait for it to reverse and you can trade reversals straight off S&T. So ES did not sweep this liquidity point. This is the liquidity point here. You see ES did not take it out, but NQ took it out. Swept it and we reversed. That is what S&T is. S&T stands for smart. What does it stand for? Let's go to Google. I think it's S&T divergence. I think it's smart money technique. I was gonna say technique. Yeah, smart money technique. So yeah, it's just like you can spot reversals from it. So I'm just trying to see. It's just weird because sometimes it looks like it's in the same place and it's not, because they move a little different still, because NQ just moves bigger or more, and then sometimes ES moves more. So you just make sure the timeline lines up. So this is 10 o'clock the day before. We're below it on both, barely, but we swept on both. So, and then this is finally swept, I think, on ES. Not quite. That one is up here on NQ. That's this one, the one we swept the day before. So ES needs to sweep this one. And then this one is the same on both. So let's see how it plays out on the 15-minute chart. Dun, dun, dun. And you just do this every day, top-down analysis. And then you just wait for it to come to one of these points, which is good because then at 10 a.m. you're not, oh, I already played the day on accident, I think. I did play the day on accident. But we can just talk about what happened. So it's really a liquidity sweep reversal. It's not that strong of a reversal though. So you either could have played this trade at 10 a.m. off this turtle soup if you wanted to this liquidity point, or you could have waited for this pullback reversal thing to go on and then play a continuation play back to the downside. This should be green because it's bullish, and play something like this to one of these blue lines. Now, that reverses, then that's the trade we should have waited for. Let's see. But we have heavy liquidity sell side. We do have a gap here. Okay, well, first of all, this is Asian session. So this is the afternoon anyway. Okay, this is your 2 p.m. silver bullet here. This is our 10 a.m. reversal. This is our 2 p.m. So this is also February of 2024. So maybe in February, the 2 p.m. reversal is bigger than the 10 a.m. reversal. Right now in the fall, it's opposite. But either way, two reversal times that are very important. And they line up with a bunch of strategies. 10 a.m., 2 p.m. Eastern time. You can see it play out. Obviously, this wasn't the nicest move, but you would have held it until 2 and then got out and then could have got back in the next trade. So let's delete everything. No SMT this today. Or maybe, let's see. Swept. Okay, there is SMT for Asian session. SMT is, again, NQ took out liquidity. ES did not, almost, but did not sweep liquidity yet. So, reversal. And what did it do? Reverse with a nice, big, fat candle. Smaller volatility because Asian session. The best setup. That's what I'm talking about. Lavish Bam. It is really the best setup. 2 reversal times. 10 a.m. Yeah, exactly, Andrew. So since I'm a beginner, I'm just looking for a strategy I could trade every day. And if it doesn't happen, like say it didn't reverse for us, we don't care because we know it's going to happen a majority of the time, and we don't have to like try to play every move. Versus I feel like at 9:30, you're trying to play, like even here at 9:30, you didn't get a liquidity sweep, it just ran down. Like you'll try to play every move at 9:30, and I don't like that. Now, if you are a 9:30 trader, you probably should have waited for it to come back in this Ferrari gap and play down to this liquidity point. But again, I don't want to have to like adjust my strategy at 9:30 for different things. That's also a good trade though. Boom, that's a nice trade. So, and then you would have been on at 9:30 and you would have not even gotten off till end of the day. Versus us, we got on at 10 and we were done at 2. So it's just the moves happen faster too at 10 a.m. So I just want to get on every day, take this trade at 10 a.m. If it doesn't happen, I don't care. I'm off the charts. If it happens, boom. And I just like to mark liquidity because some days you'll know to like catch it to keep going lower, or you'll mark liquidity and you'll just wait. Because I know some people played like there was a day where we got expansion at 10 a.m. and then it reversed, and I waited. I think it was this day. People played the expansion on the 1 minute, was this Friday? No, it wasn't that day. It was this day. So yeah, people got in when it came back down to play up, but I knew liquidity was resting right here, so I just waited for it to sweep, and then I caught this big reversal. Versus like, see, it kind of happened. It happened at like 10:30, so you could have got faked out if you weren't waiting for this liquidity point. You know what I'm saying? You'd have been like, oh, I need to go up because it's going up. Versus like if you mark out higher time frame liquidity, you can also, this is the silver bullet indicator, so it shows your liquidity already. That can be overwhelming for you, and then it shows the hour, and it'll mark out fair value gaps for you if you want to enter off them only in the hour, but that's a different thing. What mirrors SPY? NQ? Yes. So if you're trading options or stocks, SPY and QQQ match. If it's indices, it's NQ and ES. And then if you're doing Forex, it's Euro USD and then JP British Pound USD, and then I don't know the rest. There's one that matches with gold too, but I don't trade gold. But yeah, NASDAQ and ES. Show us the indicator. It's ICT Silver Bullet Lux Algo. And then ICT Sessions Indicator by Malik 1903 shows your sessions. So I use that a lot. It shows where I'm taking my profit. So when I took this trade, I was targeting the Asian low because they were close. The London low and the Asian low were close. Then they have like a New York PM, it didn't hit. But with this day, it took out. I think I had my take profit at Asian low, and then it ran down fucking forever that day. I sold way up here at Asian low, and it ran down the rest of the day. And then it shows you your lunch liquidity for if you trade like the ICT lunch setup. It shows you the PM for the silver bullet and the PM. It shows you Asian overnight ones. So that's ICT sessions. You can also use the ICT kill zones, same shit. And then obviously I use the fair value gap indicator by Nephew Sam, which shows me my fair value gaps, and then I don't have to draw them every time. And they're red and green, so I know like if we close above this red one, then we're going up. If we close, obviously this one you got faked out. It did close above all these red ones, but then it closed below this green one for an invert to go back down. You see what I'm saying? So I don't have to draw them all. I just leave this on. And I used to take them off when they filled like this, but now I can see I play inversions too now, so it does get a little messy on the 1 minute, but you'll know when to play sells and when to play buys. Those are the indicators I use on a daily. What moving average do you use? I don't really use it, but I use the 20. It's on there, but I don't really use it. But I think it lines up with ICT a lot. Like fair value gap, it tapped the 20 EMA. We got a reversal up here. We crossed below at 10 a.m. on the 20 EMA. So I never really paid attention to it, but it works very well with ICT. Like look at this, inverted fair value gap. We crossed below the 20 EMA. It works well. Or it works well for when it runs down. Like when it's a space in between, hold your trade. Because the ICT, we just trade liquidity to liquidity. But with the EMA, you know here that we can keep holding it. And then instead of selling here, we could have sold like a little bit down here. We probably would have sold after this reversal. But, you can hold your trades longer with the EMA. But 20 EMA is the best one for me. What time frame do you trade on? Which time frame do you use for top down? I use top down 4 hour, usually just the 1 hour, but I use the 4 hour a little more lately now that I trade the 4 hour 10 a.m. candle just to see where it's going sometimes. But usually the 1 hour for my liquidity points because I'm an intraday trader, and then I execute on the 5 minute, and I'm trying to get back to execute on the 1 minute. I just get faked out on the 1 minute, so that's why we've been back testing how to do it on the 1 minute because it has not been working for me. But I usually execute on the 5 minute. But you just have to you have to know what you're doing because like on the 5 minute, this was a good day. But on yesterday, the 5 minute candle, I got in like on the displacement once we broke below this on this candle. But if you wait for this 5 minute candle to close, the move is over. So it's kind of like hard to say. So I'm trying to get better, but I got faked on the 5 minute this day too as well. But it was SMT. We got SMT here. ES did not stop it out, but we all got back in. But I'm trying to not get faked out by these moves. I want one trade, but we're getting better. Could you trade futures with $700? You can on ES. I would suggest at least 1,000, but you can trade futures with $700. I think Trade you can do it with 500, and you would start an ES. Because NQ, that would be like your money will be gone in like 5 days. But y'all also can paper trade. Like people always ask me, how much can I start with? I just start with paper trading. I always do. Okay, well, I do suggest starting with money just to get the emotions because you won't take paper trading seriously if you don't use your own money first. But however, I came from options. So options you can trade with like $5, $10, $100. So I always just start with options, even though you'll come to futures eventually. But you can just trade options with way less money, so you're not as scared to lose it. Versus if you come in with $700, that's kind of a lot, even if you have money. Like it's still a lot to risk. So I feel like options would be better start. How much did you win? Win with what? Okay, we have liquidity up here on the hour on both. I don't see. Wait, do I see SMT? I mean, this happened again. Well, this happened overnight. But we do have a liquidity sweep here. And then I don't think we swept it yet on ES. But it's barely an SMT. Like, it barely. So I think it's showing we're going up a little bit. But maybe we can go up and then reverse at 10. Let's see. Let's go to 15-minute time frame. Money. It's not winning money because we're not gambling. And I'm still a break-even trader. I've only made like $400 from trading, and then I went to prop firms. And then I haven't really made money since trying to get funded. That makes sense. We do have an Asian high here, which is, oh, I see. This is the liquidity point on yes. This is the high one. This is the lower time frame one. Yeah, I've been doing this for 8 months. So people love asking me that. So you have to be willing to not make money for at least 6 to 8 months. Just so you know. If I would have stayed with the options, though, I probably would have made a lot of money. I'm not even gonna lie to you. Options are just, the prop firm rules are just so strict. But I feel like prop firms are just, they help you diversify your portfolio. Like now I have NinjaTrader and I have Replicanto, so I copy trade my live account with my funded accounts. So that's why now I deal with the headache of it. But if I was trading my own money with options, I probably would have been a lot more profitable faster. Because with options, it's a different, it's not scary. People say it's scarier, but it's not. It's because options can like run and then you only lose what your contract was. So you can technically trade options without a stop loss if you wanted to. When you see it take liquidity, don't wait for it to close above and retest for a continuation. No, because no, you wait for a market structure shift. So it could continue, but you wait for a market structure shift and displacement in the opposite direction for a reversal. Why do you say you will come to futures eventually from options? Because futures, it's just the prop firms. I feel like a lot of people just trade prop firms. That's why everyone goes to futures eventually from options. And then like with futures, you can trade overnight. You can trade London session. You can trade at 8:30. I used to trade at 8:30 in the morning. I used to trade at 7 a.m. Like there was different times I trade versus options. You only can trade 9:30 to 4:30. You know what I'm saying? What does a market structure shift look like? Okay, I'll show you if we can find one. Let's see if we get one. Market structure shift is just a swing low broken to the downside with a strong displacement candle, or it's an inverted fair value gap for some people, depends on what your definition of market structure shift. But it's usually just a swing high. So basically, let me show you. A market structure shift is if we're in an uptrend, we're making higher highs and higher lows. Higher highs, higher lows. You know what I'm saying? Once we get a candle close below a swing low, we're going in opposite direction. So you can mark this one. That's the most recent one. You could have marked one of these that almost faked everybody out on Thursday or Friday. Yes, Friday was yesterday. We got a swing low up here, which is the entry a lot of people got. So we did get faked out by this swing low market structure shift, but this was S&T. So if you were watching ES, you would have known you would have either just, a lot of us either got faked out by S&T or we just had a tighter stop loss. But you wait for a market structure shift and strong displacement that leaves the fair value gap, and most people enter back on the fair value gap. So basically, it's just this. It's harder to see on the candle, but it's like if we're in an uptrend, we're making higher highs, higher lows. Boom. Once we break below this low, we're going to come back. Boom. Market structure shift. That is a market structure shift. Once you get that candle close, and same thing on a downtrend. So your market structure shift is just, and this is all I trade. I don't wait for the pullback anymore because sometimes it will just run without you. As soon as we get a candle close, and not a wick, a full candle close. Because sometimes it'll wick like this, and then you get faked out. If it comes down and it wicks below something and not candle close, you'll get faked out. And then same on a downtrend. If you're going down, you're making, lower lows, lower highs, lower lows. As soon as we break above the most previous swing high, chill, market structure shift to the upside. And this is all I trade. And it's more prominent when it happens right after a major liquidity. So it sweeps liquidity and then it reverses. You know what I'm saying? You get a nice hourly liquidity sweep and then it reverses. That's what you want. And that's why I like ICT. A lot of people say he's a scammer or whatever, but once he said that, like, that made sense to me. And I just immediately was like, oh, I see that on the chart all the time. And then you can just see you got a long, nice wick off this liquidity point, Asian highs. And then, we technically didn't get a market structure shift yet, though. We did invert this fair value gap, but we didn't get a reversal yet. So that's why, I was trading these inverted fair value gaps, but now I'm trying to wait for a stronger displacement like that. But the inverted fair value gap wound up working for us. You see that? Also, this is the 15-minute chart, not the 5-minute or the 1-minute. But you see, we got liquidity sweep. Market structure shift, you could have waited for it to close below this swing low if you wanted and got in lower. You could have played off this inverted fair value gap. You could have played, if you're real good, off the turtle soup. Like, as soon as we wicked, you're just in there. Obviously, that's a more experience. I've caught a few turtle soups, but I want to catch more. But again, I don't want to, because then you can have a tight stop loss, so it doesn't really matter if the turtle soup, you can catch a turtle soup because your stop loss is so small that it doesn't even matter if you're faked out. And then boom, that's what you want. Liquidity sweep, reversal. And where does it happen? 10 a.m. Look at it. Bigger than the 9:30 move. It just happens every day. You know what I'm saying? This is all I want to. I cannot teach you how to catch turtle soup. That's something you're going to have to learn. Your eyes are going to have to learn. Because turtle soup is literally sniper entry. It's like you see a reversal, you know it's reversing from there, and you get in. And you just get into a sell immediately. You know what I'm saying? That's something you're just going to have to do. Because I've seen liquidity sweeps where it'll come up here, it'll wick down, it'll trade up here a little bit, and then go back down your way. That's why turtle soups are. But if you can catch them, these nice ones like this, that's something you're just going to have to really, your eyes are going to have to do. But that's it. Really, for me, a turtle soup is once we come back into a range. So if I mark a liquidity point, some people will take turtle soups as soon as we hit the liquidity. They're so confident they're taking it way up here. For me, I need the candle to come back down into the range. And I've gotten faked out by that before. But at least it's better if it comes back down to the range. So then your entry would have been a little better. My turtle soup entry would have been like this. Maybe after the candle closed, honestly. and then then I would have took the trade to the downside. So it would have been better than the inverse value gap one, but the inverse value gap was still better than the market shift trade. So to each their own. But again, I just stopped being scared of big stop losses, because it is better to, obviously a 1-to-1 is not the best, but I know a trader who's profitable and all he trades is 1-to-1s. Because once it's better to wait for sure. Like you got market shift, inverse value gap, and a liquidity sweep. Like it's definitely going down. Versus you can get faked out by inverse value gaps, you can get faked out by total soup. So you'll still get a loss versus now you have a win. So a smaller win versus is better than a loss, in my opinion. But again, that's something you'll learn when you trade on your own, what you like. At this point, at that point, was it a certain point on the higher time frame? Yes, this is an Asian high. So main liquidity points are, they are session highs and lows, daily highs and lows, and then equal highs and lows. I personally only trade session highs and lows and equal highs and lows, or just hourly highs and lows. So yeah. And ICT said himself, just wait for a liquidity rate and when to reject. I've traded just hammer candles before. I actually really love hammer candles, and that's just price action. A candle with a long wick up top like this, I'll trade solely off of this. 8 a.m. hammer candle, buy, boom. To liquidity, boom. I trade some shit like that. I'm trying not to, because sometimes you do get faked out, but I feel like the hammer candle is the strongest candle, even when it's red. It's just look at this hammer. This is a beautiful hammer. It's still went down a little bit in drawdown, but a hammer candle really helps too. My smaller wins be about $5. This can't be it. That is funny. No, you want your smaller wins to at least be like $100. It still sucks, because then your losses would be like 50, 60. Fair value Gary, get into funded accounts. See, some people are in them smaller funded accounts. Funded accounts, I have a love-hate relationship with them, because like I was trading so much more peaceful before I got funded accounts. Like I have been unprofitable or break even since. However, they do treat you good risk management, and they're nice to diversify, and you don't have to risk your money. And I feel like you'll be more confident in growing faster with funded accounts. Because I do feel like with options, I was growing, but it still was like, $100 to 200, 200 to 3, versus like with funded accounts, you can make some shit shake. Thor would be proud. Thank you. Liquidity sweep, displacement fair value gap. Exactly. It girl trader. I personally just trade the displacement. I don't wait for the fair value gap. Because sometimes like this, obviously this is a 15-minute chart, so disregard this. But sometimes it'll run without you, especially on the 5-minute. The 1 minute, it usually comes back. But for me, like, I'm not gonna wait for it to come back. Yes, my entry will be shitty and it might come back and tap some people in and not. But this week, all this week, no, you were getting left in the dust for some reason. On the 5-minute, obviously. On the 1 minute, you could have got in. You could have got in here to go lower that day, but most of us sold at the Asian low here, so some of us would not have gotten this trade thinking it was just going to reverse from here, because it's been trading sideways all week. That once we hit Asian London low, it reversed a little bit or traded sideways the rest of the day. But like this day, it ran without you. No fair value gap tap until maybe lunch, and you could have gotten in to go lower. This move smaller, but I got in up here. That's just an experience thing. This one I got in like right here, and it just left. It just left without us, but it did give you an entry to come back in and go lower. So you could have waited for the fair value gap entry. Just on the 5-minute, it's you'll leave some money on the table. But if you get on the 1 minute and don't get faked out, you'll get a better entry. This is why we're practicing on the 1 minute. So let's actually look at this on the 1 minute to see what our lovely entry would have been. Okay, so on the 5-minute, on the 1 minute, our entry would have been, let's delete all this. Liquidity sweep. No fake outs on this one. I love it. We're already just making lower lows. So this is a standard standard swing low made before we reversed. And there's a lovely fair value gap tap for you, fair value gap entry traders. Beautiful. So yes, the fair value gap entry is better than mine because my entry would have been this candle close. Like I said, I don't wait for the tap in case it runs, but it is on the 1 minute. On the 1 minute, I always did, which was nice too because I just set bracket orders. I always set limit orders, which is good because a lot of us, our brokers have spreads, and your spreads are like non-existent if you use a limit order. If you use a market order, you'll hit market and it'll be like, it'll get you in later. So yeah, waiting for the fair value gap tap, which is why I kind of want to go back to the 1 minute so I can just enter on fair value gaps. Set my brackets, and look, you get a nice 1 to 6, and it kept going lower if you wanted it. Actually, on the 15 minute we targeted here, but on the 1 minute, so you would have got a 1 to 8, which is a fucking awesome trade. But sometimes you get faked on the 1 minute. But again, like I said, like on the 1 minute, your stop loss is so little. Like, who cares? Who the fuck cares? Like on this day, whatever day that was, I think it was Friday. I think we all got faked out on Friday. And I got faked on the 5 minute, which sucked. On the 5 minute, we came down. I got on this candle. Stop loss here. And then SMT stopped me out by like a tick. And then went my way. I got back in. But on the 1 minute, you did still get faked out because we did get a market structure shift with this swing low technically. This swing low right here. Fair value gap. You would have had your market enter your limit order at this fair value gap, and then stop loss here, and then it stopped you out to go your way, which is kind of a big stop loss. Not big, but bigger than I would like, versus this one is tiny. This stop loss was tiny, and this is the trade everyone else got in. So LSFX said wait for SMT in the lower time frame to get in. So, or you could have got in like on this little pullback here before it ran down. So yeah, or if you were late on the 5 minute, this candle closed, you could have got in on these two big candles. So I want to go back on the 1 minute tomorrow, not tomorrow, on Monday, so I can catch these lovely, beautiful trades. SMT doesn't happen at any time. There is no time frame. It happens. It just happens. And you have to catch. That's something you have to catch and train your eye to. Do you also take trades because on wicks to be filled, there was a candle that was the displacement and continued by filling the wick? Yes, we have to wait for a candle to close. NVIDIA, what do you think? People love asking me about NVIDIA. I did NVIDIA already, like yesterday. Clarkson Mar, nicely weekly chart. Yeah, I only trade indices. SMT was at 10 a.m. that time. Mr. Versace, what is SMT? SMT is when one of the neighboring pairs, sister pairs, husband and wife pairs, whatever you want to call them, MESU, and we're almost out of our September contracts for future traders. So SMT is when, not the daily. I was like, what is that? Let's go on the 1 minute chart. SMT is when one sister pair makes a higher high and sweeps liquidity and the other one doesn't. So on ES, like we just said, a lot of us traded NQ and got faked out. NQ took out this liquidity and stopped a lot of us out. Which, this was equal highs, so I should have fucking known. Like, these were equal highs. It was going to sweep it and go. And ES did not, though. ES, it still made a lower high. That's SMT. SMT is when one pair sweeps liquidity and the other one doesn't. This is key signs of a reversal. A lot of people trade reversals just at SMT. Look into the volume profile if you trade ICT. I have volume on this chart, but I hate volume. Sorry to say. It distracts me and it looks insane. S&P is a sister? Yes. NQ and S&P move the same just about. But I like NQ. The price action is a little better and the moves are bigger, but also you can lose a lot of money. I've actually lost more money on NQ than ES, but obviously it's just a learning curve. This is definitely not NQ. NQ is here. Okay, so you see how NQ got swept out. ES did not. That was the SMT divergence. So if you took the trade on ES, you would not have gotten stopped out. You would have never got faked out. You just got in on this market structure shift, stop loss above this high. It would have almost stopped you out, went your way. In Q, obviously we got stopped out and we had to get back in, but we knew. I don't know how often that happens, but it also happened on Monday, not in the sense of an entry point. It happened overall, but where on Monday, soon as 10 a.m. hit, we reversed. I was waiting for it to take out this liquidity. It did not take it out. It just reversed. Why? Because ES took out the liquidity, which is SMT. On Monday, ES, Wednesday, Monday at 10. Sorry, Tuesday. Sorry. It's a 1 minute chart, so it's like you to go back so far. No, Friday, Sunday, Monday, midnight. Okay, here we go. Monday, okay, at 10 a.m. August 19th. Sorry, Tuesday. Sorry, I'm like, what the fuck? Okay, so yes. So ES took out this high and reversed at 10 o'clock. But on NQ, we did not take it. So you would have known to get in this reversal, which I did. I got in right at 10 a.m. I got on the charts and I hit sell and took it to a previous low. I think I took it to this low here because these lows are close. And then boom, end of my day. 17-minute trade, made $400. Beautiful day. But you wouldn't know. You'd be scared to wait for a liquidity sweep if SMT didn't happen. So you just have to pay attention. But obviously the displacement, you would have gotten in on the trade. Even if you got in down here, you know, you would have caught the second half. So sometimes you can just trade displacement. That's SMT, yes. ES and NQ are sister pairs. I mean, they're not pairs, but since most people trade Forex, I don't know what to call futures. Like options are called options, futures are futures, and Forex is Forex with Forex pairs. Options are stocks. Futures are just futures, I guess. But yes, that's all SMT is, and you just gotta pay attention to it. Obviously, some days, and there's another day where we got reversed to the upside. It was SMT, like ES. NQ didn't take it, but ES did. But obviously, I just caught the reversal. So you don't really need SMT. I mean, it will help you, obviously, but you'll just, you know, if you get faked out, you get back in. If you don't get faked out, you're just in the trade, you know. Do you trade gold? I do not. My goal is 500 a day. You can do that. Can you do SMT with SPY and QQQ options? Well, first of all, if you're trading options, you should be looking at the futures chart. The futures chart is just the best chart. If you're trading Forex and you're trading NAS, US 30, or you're trading any of those, you know, like NASDAQ, SPY, ES charts, you should always look at the futures charts. I even did that when I was trading options. The futures charts are just cleaner. The liquidity points are easier to see. There's no gaps in the opening market. Obviously, if you trade opening gaps for options, that's your strategy, then you should be on the options chart. But like, you don't have to, like, this is SPX, which is the Forex version. SPX is the Forex version, and then obviously SPY is the regular stock option version, but it's the same. I mean, obviously overnight it's going to be choppy. Like tomorrow at 6, this will look like a normal chart for us futures traders, but for options, you know, it's overnight isn't a thing. It opens at 9:30. But it still looks like a nice chart. Like, it looks the same, but I was trading futures charts when I was trading options. However, again, you can still, but that obviously if you do brackets, you know you want to be on the options charts. You can know like what actual price to put your order in, because the numbers are very different. It's like times 10 on futures versus like, but when I was trading options, I was just manually entering my trade, and then on the options chart on my phone, I would put the numbers, the correct numbers. But my entry, I was looking at the chart. But yeah, it's just SPY and QQQ, and it's the same thing. S&T it's the same thing. Let's see. This is SPY. Obviously, SPY did not take liquidity, as we see. And then on QQQ, on Friday, it did. Same thing. SMT is the same thing. It looks exactly, they're going to look very similar. See, in Q, liquidity swept, stopped this all out. And then if you're options SPY trader, you do not get stopped out. So that's all. Same thing. Someone said NVIDIA to the moon, period. I don't trade gold. I am trading now to 100. It's been so bad. I used my last capital on a funded account as a last resort. Now I hope I pass the challenge. You will, and or you'll just, have to make money for a job to get your money back a little bit. But I've been so traumatized to the point where I can't take trades because of it. Well, then you should paper trade. Paper trade. Don't do your funded account. And you can also paper trade on your funded accounts. Are you still looking at the 10 and 2 times? Just 10. Yeah. This is crazy. Yeah, my chart does look crazy. It's just the fair value gaps. Because can you imagine you're drawing all these fair value gaps in real time? Be so serious. Now, you might not need to, but these are all the fair value gaps that are getting made in real time. Why would I draw those? Exactly. I'm not. Yeah, I only trade at 10. I don't trade anything else because I get faked out the least. And it's after all the news, so you don't even have to check news for real. Because you'll see how big or ugly the news candle looks. But if you're traumatized, yeah, storytelling bread, just paper trade. I paper traded all this week. And yeah, it sucks because I had a profitable week and that money does not go to my bank account, but you get your emotions back calibrated. And that's why I always suggest trading your own money first because you take it seriously when it's your own money, and then paper trade because then you'll take paper trading seriously. Because most people don't. They paper trade, they start YOLOing, they turn their 100K account to 200K. Next thing you know, they think they can do that on real money, and it's like, no, you need to paper trade and treat it just like this, exactly how you would every morning. And I never did that until I traded for like 6 months of my real money in funded accounts first. It's okay. Like, it's a process. I get it. There's times you're going to be scared shitless. There's always times you're going to have to recalibrate your emotions, even if you've been trading for years. And you just got to take the time to either paper trade or not trade or take a break or, whatever you got to do. Let's do one more. And then we'll come back tomorrow and do this again. And again, and again, and again, and again. Especially because I'm trying to master, again, this 1 minute time frame. Because I began faked out, which the 1 minute was the time frame I was the most profitable on. I cannot lie. I cannot lie to you. But yeah, it's just always a process. But it's better. I used to drop ship, and I like trading way better than drop shipping. But if not, you can be like, hey, I don't like trading. Business or drop shipping or other things are better than me for me, and that's okay. You tried, and that's all we can do is try. Luckily for me, I worked in film, so I can always go back to film. I actually need to do my training course, which I don't want to do because I'm like, I don't think I'm ever going back to film, but I have to take safety courses every 6, but I get paid to take them, so I'm actually I'm gonna love that check actually when I take the safety course. But you got this. You're past your funded account and you'll be fine, and or you'll just do paper trade. And paper trading is still fun, and you'll get your emotions back, and you'll realize, oh, my strategy is great, or no, my strategy sucks, I need to find something else. That's what you gotta do with paper trading. Because once you know your strategy works, you're confident and you're patient. All right, our liquidity is marked. 15-minute chart, because I feel like you see the SMT the best on a 15-minute chart. We'll mark our 10 a.m. time frame every time. I like to mark it, even though I have that silver bullet, indicator on, I still have to mark it in red because the silver bullet indicator doesn't show up till the 10 a.m. starts and afterwards. I like to see when the 10 a.m. is about to happen. Alrighty. Well, again, before 10 a.m. we don't give a shit. So we're just going to let it run down and then hopefully it reverses from one of these lines between 10 and 11. There was another one. Because if I mark 3 on ES, That's not the same time. Oh, we might have an S&T cooking up. We might have an S&T cooking up, but let's see. That's only S&T. Like the time frames, they look like this. Looks like the same chart, but this is way up here on NQ. So this is the same chart. So it's like sometimes it gets weird. Okay, I'm trying to see if there's another liquidity point lower on that NQ can take out, just in case it wants to run down. But it could reverse from here. So let's just see. So now we're just waiting for a reversal. Obviously at 9:30, you got a nice trade today. That's a nice trade. You got a wick up, took out some internal liquidity, and then run down. I know some people trade this all the time. I used to, but then I got faked out a lot. Okay, we got kind of a reversal, and then this is definitely S&T because this line is this line on NQ. So I think we're gonna reverse and do an S&T. So let's see on the 1 minute if we get a nice market structure shift to the upside. We do after this candle, candle close. There's her value gap right there. We can take it to the low, and then let's see if we can take it all the way back to the other side. I don't know. I feel like sometimes it could keep going down and ES is just being slow. That's what really sucks when it does that. So I get scared. Like that. See how ES is finally going down? I've seen that happen a lot of times. That's why I'm like, sometimes it's not S&T. Sometimes ES or NQ is just slow. So we should have waited for this reversal on this liquidity point like I originally thought of. But it could, let's see. I mean, that's the end of the day. But yeah, this is the liquidity we should have waited for. This reversal down here. It wouldn't have been as big of a move, but... if it's already close to liquidity point, like it comes all the way down here and it's right there, you might as well wait for it to go. This is still a nice trade. It took out this liquidity, or if there's a reversal trade. This is also technically a reversal trade. I do like a good pullback reversal entry as a continuation play. I don't play continuations, but if it pulls back a lot and gives us a whole reversal, like this is still a whole reversal, I don't mind that trade. I'm not as good as catching these though. I still would rather wait for this, but this is why we're back testing, so I can get better at this. But that's still a beautiful trade. I usually can catch these on the 5 minute. Let's see what this look like on the 5 minute. But yeah, let's look at that 1 to 5. Because I just feel like our bias was so bearish. So that's why I don't really trade a bias, but some days it's obvious. Like this, we are running down the rest of the, not the rest of the day, but it's definitely, yeah, it came up a little bit, came down for us. Let's see, I mean, 4 o'clock is the end of the day, but this is 3. If it comes and sweeps this, I'd be happy with that trade. Yeah, see, I just would have waited for the reversal. And still still a bigger trade. Just waited for it to come and then come and take out some more. But they're both good trades. See, 1 to 6, a little bigger. Yeah, I just would have waited for this sweep, some over, because this again, we marked this liquidity on the hourly time frame, so it's a strong liquidity point. So yeah. Obviously, I would have been trading the rest all day, which sucks. I would have gone at 10. I wouldn't have entered until almost 1. I tried to enter before 1. If I don't get entry before 1, then, you know. But this is still a good entry, too. So, I need to get better at playing these, like, you know, pullbacks for a good reversal to the downside still. Like a reversal continuation is what I call them. But... because sometimes, like, I know TGR takes these. Some people take these. Then some people take these and they want to go, their target is way up here, like mine usually is, and then they get stopped out. And versus, like, just taking their profit from this move, like the little move we marked. But yeah, I would have waited for this lower liquidity point. It reversed from both. And yeah, so we'll do this again tomorrow. How do you locate liquidity? Liquidity is just swing highs and swing lows. But I told you, session liquidities, equal highs, equal lows, and daily highs and lows are the main ones. But you should have your sessions marked. Your Asian session, London session, New York session. But liquidity is just swing highs, swing lows. So if you go on your hourly chart, swing low, swing low, swing high, swing high, swing low. That's all liquidity is. And especially when they're long like this, they trump. And if with the sessions on, let's see. See, London high, Asian high, previous New York high. That's all. It's just swing highs and swing lows. Futures is superior. Please teach me. So do you think futures is better than options overall? That's a hard question. I think futures are easier to trade technically, because the thing about options is when the chart is trading sideways. So if the chart is trading sideways, like say you got on the chart and it's doing this kind of shit, with options, with time decay, you're losing money. So that's when I switched to futures. So there was a times where the chart was just slow, and I was trying to wait to my option contract to go green for I sold, and it was like trading sideways, but it was slowly going my way. Now I was in the green, but my options contract was negative because time decay. Versus the futures, if it's trading sideways, I can just close in profit and go about my day. Like if futures, if I enter here, if I'm down, I'm entering sells here. If I'm in the green, I'm in the green. If I'm in the red, I'm in the red. And I'm back in the green, I'm in the green. But with options, if it's a slow move, you're in the red the whole time. But with options, I think are better because options, without the time decay, you can play cheaper options. You can trade with smaller money. On big moves, you can turn $100 into like 1,000. You can easily have like 2,000x returns, which you can have that on futures too, though. You can have big returns on futures. However, with options, it's a little safer because you only lose what you pay for your options contract. So futures, you have to have a stop loss because say it goes your way, boom, and then it goes opposite against you, you can lose just as amount. You can lose your whole account. Versus options, you can buy a $30 options contract for puts and it runs down. You can let that options contract run. Like you're not scared to take profit. You're not scared to do stop loss because it's only $30, and that $30 can turn into 300 you're just like, oh well, you know what I'm saying? That's the only thing about options. Like, I feel like options I traded the best and I had the best risk management because it's not as scary because their options are so cheap and they just flip into like a lot of money. But I do think futures is easier because you don't have to because options, you have to buy in the money or at the money, or really at the money, or slightly out of the money. But if you buy too far out of the money, it's gonna go your way and still be wrong. Versus futures is just buy and sell. How many contracts you want? 1, 2, 3, buy, boom, in there. Or you want to sell. So futures is easier. And then it really was just the prop firms. So now I can copy trade with my prop firms, and then I can make money, trade on my live account, and then I can look over at my prop firm dashboard and be like, oh, I have 5,000, I can get a payout. That's really why I switched to futures. There's no prop firms for options. And then obviously, if you live in LA or you live in, if you want to trade London session, futures, you can do that. Like futures tomorrow, you can trade tomorrow at 6 p.m. Options, you can't. You have to wait till 9:30 Monday. So it just depends. If you want to trade, if 9:30 to 4:30 works for you, options, stick with options. But if you want to trade, you can trade overnight. You can trade, you can trade the 3 a.m. silver bullet. With futures, you can't trade this 3 a.m. silver bullet with options. You have to wait till 9:30. So that's the only thing. There's things like that. Like the London Power of 3 is a good trading strategy. If you travel and you want to trade based off your time zone, instead of having to trade 10 a.m. and be up at 3 a.m. when you're in London, you can just wake up at 8 a.m. and trade London session. It's just, futures gives you a little more freedom, and then obviously the prop firms. But I do think options, I feel like I traded the best. I was the most profitable when I was trading options. But a lot of people leave options for futures too, so I don't know. I think it's just the risk management with options. So yeah, we'll do this tomorrow again. And I do this every night at 8 o'clock. I just, my 1 minute eyes are not a thing anymore. But yeah, I probably would have waited for this, or I would have waited for, I mean, this is still a reversal. I don't know if I would have waited for this one, or let's see, because this is a retracement. Where's the 0? It retraced up into, it didn't retrace up into 50% at all. Like, if I was a retracement, I would have wanted to come a little higher. But I've done that before too. It just depends. I have days where I know it's going to retrace and now wait for it to come up and then catch the reversal continuation, which was this trade, a nice trade. But some days I won't. Some days I'll just trade this. So it just depends on what my eye sees that day. I can't say. But I would you would love to catch this. Honestly, because then you're done faster than this trade. This trade you would have been on for hours, which is still fine. It's still a bigger trade than this trade, but it would have been nice to catch this trade. But as long as you catch a trade and you make money, all that matters. Even if we took this original trade that we were gonna take and we sold when it came back down. And we, made what, $300 instead of, $1,000, whatever. We still made money, didn't lose. It doesn't matter. All right, I will see y'all tomorrow because I've been on live for a little bit. But you can do this every day yourself with FX Replay. Yeah, the guy who said he was scared he's gonna lose his money, you lose his last money on his funded storytelling bread. You should be paper trading and getting FX Replay probably. And backtesting first your strategy and seeing how well it works at certain times, so you get your confidence back. Because the hardest part of trading is emotions, for real. I can guess these markets 90% of the time, and I do it very well. But emotionally, sometimes I trade very badly. Does this work with Apex? What do you mean? What do you mean, does this work with Apex? FX Replay? Or what are you talking about? FX Replay is not a trading platform. It's a replay practice platform. So it doesn't work with the broker. It looks like TradingView though, so it makes it easy for you, but it's not. It doesn't work with anything. You just replay your trades. That's all. But Apex works with TradingView, yes. It does. But yeah, I'll see y'all tomorrow, 8 o'clock Eastern time. We'll be doing this again. Keep back testing, getting our 1 minute eyes back so we can get great entries and get great risk to reward. Oh, I'm sorry, funded challenge accounts. Yes. Apex has funded challenge accounts. But what do you mean work with? I don't know what that means. You mean like this trading strategy, or I don't know what you're trying to say. Options don't work with Apex. Apex is futures only though, if that's what you're asking. Options, you have to only use your own money or paper trade. That's all you get with options. But yeah, I'll see y'all tomorrow. We're gonna get this 1 minute eye down and we're all gonna be rich and driving Lambos really soon. Or soonish. Making my way. Sorry, YouTube always